This is how much home prices have gone up in the past 7 years, with the double whammy of home prices continuing to rise and interest rates going up too. Is there a way to lock in a home today, but lower the payment later without refinancing? By the way, I'm Nathan. I've earned 120 plus 5-star reviews by guiding people through this process, plus my own experience buying and renovating over 15 units, just like this one here. I'm gonna show you this magical word called recasting, which I know isn't being used a lot right now. We'll dive into what recasting is, who it's for, where I see it being used, and how I would use it in my real estate quest. Let's jump right in. Let me know if this sounds familiar for anyone who's seen home prices go up in the past 5 years. Let's take $500,000 house as an example. Assuming we can only save $20,000 per year, some may think it might take 5 years to save 20% down to avoid PMI, but in reality, that $500,000 house 5 years ago might be worth $600,000 5 years from now. So in reality, it might take somebody 6 years to save up. So that's why a lot of home buyers feel like this real estate treadmill just keeps getting faster and faster and it's running away from us, right? But that's why I want to teach you about recasting, how you could put 5 to 10% down, use natural appreciation and saving up and putting more down later to remove PMI, lower your payment. Again, this is a powerful tool if used correctly. Now let's cover what is recasting. After you buy a home, the keyword is after, by the way, this is where you make a large down payment. Again, whether or not you saved up over time or got a bonus, inherited money, things of that nature. Over a certain amount based on lending criteria, the lender will then in return lower your mortgage payment. Video over. I'm just kidding. There's still some nuances that I want you to know about so that way you can make the best decision for your specific scenario. So in the board of knowledge, here's the 2 tests to figure out if this would be a good fit. Is we want to figure out what's our goal with this house. So here's the 2 tests. Is my goal to pay the house off sooner, or is it to lower my mortgage payment? Those are actually 2 different things. So this essentially helps me later, right, down the road. I'm paying off a 30-year mortgage in 10 years or 20 years or whatever, right? You're paying it off sooner to be aligned with your retirement goals. This will help you now. Like most things in life, there's usually a trade-off, right? If this helps you later, almost like saving up for your retirement, you're gonna lower the amount of cash that you have today, so that way you set yourself up for success. However, if the goal is to help you now, so that way you can get out of, let's call it debt or whatever the goal is, this will be the trade-off for later sometimes. But in either case, doing something is usually better than nothing. Let me explain. So in this example, if I were to pay off the home sooner and this would help me later, so let's say my mortgage is $4,000, right? So if you actually made 13 payments in per year. So instead of 12 payments per year or one every single month, you actually make 13 payments. Instead of paying the house off in 30 years, I think just by making one payment one time in the beginning, I think it shaves off like 7 months or something like that, 6 to 7 months off your mortgage payment. So instead of 30 years, it's like 29 and a half just by making one extra payment. However, you continue this payment for the next 24 years, you'll make what? 24 extra payments. You'll still make the regular payments, but you'll make 24 extra payments. That's how the math works out for most interest rates, down payments, etc. So you'll make 24 extra payments. What you'll end up saving is 72 payments, which is awesome. So you put 24 in extra, and then you shave off 72 mortgage payments. So you pay off the house instead of 30 years, you pay it off in 24 years. Like how amazing would that be, not having mortgage payments for 6 years? So I like implementing this strategy when people are really close to retirement and they're refinancing, making those extra savings, putting it all back into the mortgage. Because usually what happens is when you're retiring, your income does lower. So that's something we want to be mindful of. So again, this helps you later, right? So on this other side, we have recasting, which is the objective of the video. So I'm going to do some quick math where we take 4,000 times 24, total extra payments that you would have made anyways. That's roughly around 100 grand, I think about 96,000 to be exact. So we'll take this 96,000 again that we would have made with this extra payments in this hypothetical example. And essentially we would take this, do the magical recast, and then my payment would more than likely lower to $3,500 a month there. So again, this helps you now. Don't worry, you might be wondering, well, how did you get this 96,000? That's in the next section. We'll cover who it's for. By the way, if you're listening to this, if you did some quick math here, you're like, about 100 grand, it lowers my payment by about $500. So kind of as a pro tip, if you save up an extra 100 grand, it's more than likely going to lower your payment roughly $500. Now, if you're like, well, Nathan, saving up 100 grand might be tough. Do the division and the ratio is going to be the same. If I put an extra $10,000, right, which is 10 times less, it'll change your payment roughly $50 a month. So take that pro tip. About $10,000 will be about $50. About $100,000 will be about $500 a month if you wanted to do quick math. Let's cover who recasting is for. I've identified 6 categories. Number 1 is vesting stocks. Let's say you put 5 to 10% down at the purchase of your house, and let's say you have a cliff vesting schedule. More than likely what's gonna happen is you'll have the other 10, maybe even 20% down 2, even 3 years from now. This is where recasting comes into play, where you can make that large down payment. Number 2 is mama or FANG employees. So very similar to number 1, you more than likely will have bonus, stock options, RSUs, all of that locked up, and it may be unlocked next quarter, next year, or there might be a large product announcement that's coming down the line, right? Or let's say you have a low earnings report in one quarter, and then the next quarter you have a killer earnings report. It might make sense to sell some of the stocks. This is where recasting comes into play. You essentially can pull the future payment that you want into the present. Number 3 is tax refund. My sweet spot is about $10,000 or more. If you receive that in the past year or even 2 years, this is a more probable thing, the tax refund. Or if you're predicting with your tax advisor in like November, December, this might be something you might want to do with recasting. Number 4 is bonus. So again, sweet spot is about $10,000. So that way you can make a significant change in your recast. Number 5 is settlements, whether that's insurance related or legal related. Usually those are going to be big payouts. So that's something that you can look into to do a recast. Number 6 is business owners. So basically you might have a strong quarter. That's where you can put a little more money towards your mortgage to pay it off sooner or do a recast. And again, it's one of those things where you want to manage your cash flow correctly, make sure you have enough for your tax bill, and then invest it back into the house if you wanted to. What's the common denominator with those 6 categories? The test that you can use for yourself is ask yourself, will I receive a large lump sum of money in the future? So let's cover where I see recasting being used often. First place is going to be in high appreciating markets. And the reason why, you might have a situation where this house is worth X dollar amount, and then the next year it's gone up $50,000. And then the following year, it's gone up a total from this day, $100,000. And with recasting, you can pull the future into the present. This is a great way to visualize that. And essentially you can put 5% down. And as time goes on, you essentially mitigate the home prices going up. And now essentially you pause the treadmill, right, of real estate. So it doesn't feel like it's running away from you. Then you can continue to put more money down as time goes on with those, if you're in the who section, those large lump sums. And the next place where I see it is states with adjusting, if I spelled that right, taxes. So states with adjusting taxes. So common states like Florida, Texas, and New Jersey, where the property taxes adjust based on the market. So if you have a really good market, even though you bought 20 years ago, your property taxes will increase. And that's essentially how places get gentrified, right? In California specifically, you have Prop 13, essentially you will lock in your property taxes. So that's where you actually see situations where the owner of the property that bought the property like 20 years ago, they're like property taxes are like $50 a month or $100 a month, which is crazy, right? This is for non-adjusting, but then adjusting states like Texas, and these are the common ones that I know, Florida. So you might be in a different state that has this as well. But yeah, so essentially, again, with recasting, if your property taxes are increasing, you may want to find ways to lower your payments so that way you're staying in that comfortable range. And I'm going to throw a little bonus tip and call this also when, as a quick side quest, I do see recasting quite often when we're in an increasing interest rate cycle. The reason for that, let's do the opposite, right? If rates are going down, more than likely refinancing might make more sense, right? So that's where you could just lower your payment by lowering your interest rate. But when rates have already gone up, so again, if that's in 2021 or even in 2020, right, when people refinance, it may not make sense to refinance because their payment would increase. So that's where recasting comes into play. And again, if rates have gone up and you're looking to retire soon, or where your income may have decreased, but you're making high income today, this is where recasting comes into play, where you can make those large lump sums while you have the money to get into a comfortable state. However, at the time of recording this video in late 2024, hopefully the rate momentum trends downwards into 2025. That's where most people are going to refinance, right? So again, to recap, I do see in an increasing interest rate cycle, I see recasting being used a lot more. So I'm going to show you how in 3 easy steps. Number 1 is ask lenders. So this is actually where you make your mortgage payments. You can look on your mortgage statement. There usually is like a 1-800 number or customer service line. Or if you go to your online portal, you may be able to search recasting on their portal or their FAQs. And I'm going to put on the screen here the exact script that you can use if you're reaching out to them via online chat, email, or even phone call. And feel free to screenshot this and copy it. Do you allow recasting? ? If yes, is there a minimum amount I need to recast? And is there a processing fee? The reason why we're asking those questions is, do they allow recasting? Straight up, yes or no, right? If there is, usually there is a minimum amount you need to hit. Sometimes it's $300, $5,000, $10,000, whatever. It's important to know that. And then also, what's the processing fee, right? If it's free, awesome. If it's $300, and we want to make sure it's worth doing the recast in one lump sum instead of doing it like every single month, right? Trying to hit that minimum. And if there's a processing fee, we want to make sure it makes sense, right? If it's $300, we want to know what that break-even point is to make sure we're making a strategic decision with recasting. Okay, number 2, figure out how much to recast. Remember I mentioned that bonus tip earlier? I'm gonna write it down here. About every $10,000 is about $50 a month. So if I put an extra $10,000 down, then I may lower my payment about $50 a month. If I put 100 grand down, it might lower it 500, right? Now this is where I would use this as a quick back of the envelope analysis. Now this is where it gets really spicy and interesting, is if you're actually really close to removing your PMI or your private mortgage insurance, and you originally had 5% or even 10% down, getting to that 20% mark will actually save you more than this $50 a month or whatever the $500 if you put 100 grand, because you're also going to remove your PMI, right? So that's actually where you can look on your mortgage statement and see how much your PMI disbursement is or MI disbursement is, and kind of reverse engineer from there. If you need any help, feel free to leave a comment or follow me on Instagram and send me a DM. I would be more than happy to help you. But also here is how you can do an exact calculation. So this is a quick and easy way to figure out how much to recast for most people. Just using Google mortgage calculator, loan amount 500,000, assuming a 5% interest rate. Again, for your loan amount, you can plug in the exact loan amount that you have right now. Maybe it's 700 or 200,000, right? Here, you're gonna take the payment of 2,684 in this hypothetical scenario. And let's say I want to recast, let's call it $50,000, right? I received a nice little bonus and now I want to recast to lower my payment. So then your loan amount hypothetically would be 500,000 minus 50,000. So that's $450,000 left over. Now you have your monthly payment right here of $2,416. So you subtract what you saw earlier. And again, this is without property taxes or homeowners insurance or PMI. This is just principal and interest. You subtract what you saw earlier. I think it was around like 2,680. And then you subtract 2,416. I think that's right around $250 a month. So that'll get you a really accurate number. I think the exact math is, let me do that real quick, is $268. So that'll get you the exact number of how much the recast would lower your payment, whatever works best for you. Number 3 is make the payment. I know it's a scientific process, right? But basically you have identified, can I do it? How much do I want to do? And then you follow through with the plan. So as promised, here's the bonus quest of how I would use recasting. So essentially I would put a 5 to 10% down. In this situation, I'm putting 10% down, assuming a $500,000 house. And then next year or 2 years, based on your pace, put an extra 5% down. So that's about $25,000. Now, obviously I can't do math and I had to retype that, but rewrite it out. So $525,000, that home price would have increased in a year or two, right? And then the following chunk of time, call it 2 to 4 years, that house may have gone up to $550, but I locked in the home price at $500. I put an extra $25,000 down. So that situation, I actually would have 20% down technically. It's just spread out over a certain amount of time. It doesn't need to be one shot at closing. So this is how I would use recasting to pull the future into the present and avoid that real estate treadmill from continuing to run away. So remember, every situation is completely different. If you have a specific scenario, feel free to send me a DM on Instagram or leave a comment down below. And as always, I'm rooting for you. This is Nathan signing out.